Hello, everybody. Welcome back to another market close. It is Monday, March 25th, 3:46 p.m. And we are here back again for another market close. I'm sorry the lighting isn't the best. I fixed the light from the morning and then it fell right out of the socket again. And it's one of these old studio lights and it just doesn't stay in. So literally on Amazon, I got so annoyed by this thing. I just ordered 2 LED lights that don't need you to screw in a bulb. They just light up. I don't know why. It's been 2 years. I don't know why I've been operating like this. But I got 2 of those. And what was interesting when I ordered it, it's going to be here by 9 p.m. tonight. It's going to be here by 9 p.m. What world are we living in where I can get lights in 5 hours so that tomorrow for the market open, I don't have to worry about the lighting anymore. It's just an incredible world we live in. I mean, it's one of those things where you're like, goodness gracious, this is the world we're here in. But that was one good thing that happened. Another good thing that happened is 3 letters decided to start acting in a very exciting way. Ladies and gentlemen, Bitcoin is up right now at $70,000, $70,903. I don't think we touched 71, or I think we touched it very briefly. At least on Robinhood, I got the notification that we touched it briefly. It's not showing on Webull, but we did get to 71 or got very close. 70,916 is the top right now on Webull. Maybe we hit 71 after hours. Bitcoin is up, and Bitcoin being up has a lot of other stocks up. What other stocks are up? Well, one of the ones that I like, Robinhood, $19.09. It was a battle at that $18.90 range, but it finally broke through to 19, fell right below to $18.99, got right back to 19, fell below again. Let's see if we can close at 19 for the first time in 3 years. That would be a very good thing for the stock. So let's see right now if we can actually close to that $19 level. Some of the other crypto plays are going pretty wild. If you clicked on the thumbnail, you probably saw Microstrategy up 21% for the day. $1,800.46. Look, the only thing I can say is if you got in this, congrats. I mean, if you got in this cheap, congrats. It's one of those ones that's hard to chase right now, but if you got in, and you're doing pretty damn well on this. Ride is up 9%. Marathon, the Bitcoin miner, is that one's doing the worst out of everybody. That's up 1% of the day. If you're in Marathon as your main Bitcoin mining play, it's just not working out in terms of really getting momentum. CleanSpark, on the other hand, up 20% on the day. So if you're in CleanSpark, you're doing very damn well. Bitfarms is down only 1% of the day. Their CEO stepped down. Thought they would be down a little bit more on this news, but Bitcoin going up obviously is very good for Bitfarms, which is a Bitcoin miner. So that one is down only 1%. Coinbase up 8.77%. Bitcoin again trying to fight for that $71,000 level. Ethereum 3,600. CleanSpark 20% of the day. And then MicroStrategy up 21%. Robinhood up 4.21%. Now, why is Bitcoin going up? Let's talk about that. Why is Bitcoin actually going up? Because I think that's worth talking about given some of the price action we're seeing on Bitcoin. Ian says you got MicroStrategy at 249. That's incredible stuff, dude. If you got and MicroStrategy was stuck at $20, or sorry, it's not $20, $300 in 2023. I did a little bit of analysis on it on Twitter that I'm going to show you guys in a second. And it went from 700 to 400 in January. So really, you were sitting on dead money here, and then in January you had to sit on a 40% decline. And so if you held through all of that, you deserve the wins on MicroStrategy. I mean, you absolutely deserve the wins. So congrats to those who are on MicroStrategy. Okay, couple tweets that I want to show you guys on Bitcoin. Reddit's at 60. I didn't even know that, dude. I was not looking at Reddit all day. I was not. All right, so this is actually good for Robinhood, dude. I think a lot of you buying Reddit might be buying it on Robinhood. So that's good. We'll get to Reddit in a second. So here's some of the tweets I'm looking at on Bitcoin and some updates I want to give you. First, the London Stock Exchange has agreed to launch a market for Bitcoin exchange traded notes on May 28th. Now, this is not an ETF. The exchange traded notes, my understanding of it is it's still relegated to accredited kind of elite institutional investors. So retail doesn't have access to it. You got to remember, around the world, retail, UK citizens can't just buy a Bitcoin ETF, to my understanding. There are certain rules and regulations. Now, if they have access to American ETFs, and let me know if you're in the UK in the chat, can you buy a Bitcoin ETF? Because from my understanding, those ETFs are relegated to America. I could be wrong on this, but I don't think people across the world can just buy ETFs like this. If I'm wrong, then that's great. But a lot of the retail investors in different countries don't have access to some of these Bitcoin products. They have to outright buy the Bitcoin. That's where Coinbase has such a big moat, because Coinbase is a global product. Robinhood is not a global product, and that's the benefit of Coinbase. And so people have to just buy Bitcoin themselves. Okay, AY says in the chat, no, we can't. Yeah, that's what I thought. I thought a lot of people can't, if you're international, buy the ETF. So if that's the case, you need your own country to allow the ETFs or to make their own versions of ETFs. And London is not ready to do that yet. The UK is not ready. But exchange traded notes are there, and that's really bullish because more institutional exposure can happen for Bitcoin. Another thing that's really interesting, and this is a little bit longer, but I want to show you what this looks like. We're not going to go through the entire thing, but this post right here is talking about a macro crypto summer. And the idea behind it is ISM picking up manufacturing, which leads to GDP growth. And when that happens, that's driven by liquidity, which this person, Raoul Paul, argues bottomed at the end of 2022. The macro summer and fall are all about liquidity rising and is a core part of the everything code thesis. I'm going to leave this in the chat for anyone who wants to read this. I thought it was a pretty fascinating read around what this person's argument is around the crypto summer beginning. You know, people talk about the crypto winter. Well, what does a crypto summer look like? It looks like GDP growing up, which is where ISM comes in, and it looks like liquidity going up, which then fuels Bitcoin and obviously tech stocks. He says that in 2012, 2013, we had a macro summer, 56% on the NASDAQ. 2016, 27, 42% on the NASDAQ. 2020 to 2021, 89% on the NASDAQ. That sort of crypto macro summer is very good for Bitcoin and growth related assets. He says right here, Bitcoin loves macro summer and fall even more. Crypto summer has started and fully develops post halving. It's all part of the everything code cycle. Obviously, we had a halving in 2012, 2016, 2020. 2024 is the next halving. So it's kind of lining up the halving event with ISM increasing, which leads to GDP growth, which then also leads to liquidity increasing. You need liquidity in the economy for crypto, in particular Bitcoin, to have access to capital. And if you put all that together, along with it being an election year, you get a pretty interesting result, which is Bitcoin goes up. So it's going to be really interesting to see how this ends up playing out. Macro strategy. Yes, basically this is a macro strategy. And I mean, if he's correct on that thesis, again, we'll go through it again later, more in depth, but as a high level overview, ISM goes up, GDP growth goes up, liquidity goes up, halving event occurs, supply shock happens. That has happened 3 times, 2012, 2020, and then 2016. And in those 3 summers, when that halving event occurred, the NASDAQ's up over 50%. Which is very good for Bitcoin. We actually talked about this in the morning. In the morning, we talked about, if interest rates go down, is that bad for Bitcoin? The bull argument for why that's bad for Bitcoin is that that means inflation is going down, Bitcoin's a hedge against inflation, therefore Bitcoin's not going to perform as well. My argument is that's stupid. Bitcoin is not really a hedge against inflation. Bitcoin moves up with inflation because that means politicians have to print more money, or eventually they'll have to print more money. And Bitcoin right now trying to get to that 71,000 level. We're $4 away. Psychologically, that'll be very important. And then if inflation goes up, quantitative easing goes up, there's more liquidity, Bitcoin goes up. That's kind of the logic that I think of it when I think of interest rates going down, which is obviously very good for Bitcoin. There we go, 71,000. There we go. $71,000 for Bitcoin, 71,009 bucks. Let's see if we can hold it. We hit it live right here on the market close. Now we just got to see if we can retain the 71,000 level. But the fact that we're at 70,000 literally in a day, dude, this morning we were at 67. So, I mean, really, it's done pretty incredible. And now maybe the ETF inflows today are also very good. Grayscale will have outflows. Hopefully those outflows aren't that ginormous. And if they're not, Bitcoin might be able to handle this $71,000 level. So going to be really exciting to see how that plays out. Reddit, let's look at that one now. Wow, it's up 30%, guys. I didn't even look at this all day. I was too busy trying to fix this studio lights all day. I didn't even look at Reddit. Oh my God, it's up 30%. I mean, hey, it is what it is. People are buying the stock. I mean, look, I've said on this stream many times, I think 8 to 10 billion is a pretty fair valuation. You could argue it's a little stretched, but you could also argue it's relatively cheap. I didn't want to participate in the IPO, A, because, I don't have that much capital to just be dumping it into an IPO right now. But B, I don't really trust the market in the context of an IPO like Reddit. Now, granted, the valuation is probably cheap enough where if you got in at $34 and it's oversubscribed, they think they have an AI moat, they're close to profitability. It's a good IPO. It did pretty well. And so if you got in at that, if you got an allocation at $34, you're sitting pretty heavy right now. The question is, can they maintain these levels? And look, if the next quarter, if they're profitable, which they're only $90 million away, I don't think that's crazy, then Reddit's gonna do well. I mean, again, 10 billion is not that crazy. I've always said 6 to 8x on revenue is not that crazy. Could this thing get to 20 billion before it really tops out? Yeah, it could. And if they sign another AI deal with a company like Google to be able to license their data, that could really get the market excited. But right now, I do feel it's a little memey in terms of going up, 70% in like literally 2 days. So a little bit aggressive, but the valuation probably could call for a bit more if there's liquidity. And the other thing that's Reddit going up is really good for, that means there's money in the system, right? If Reddit's going up, that means there's money in the system. If people have money to be able to dump into a new company like Reddit that hasn't fully proven themselves in the broader public markets, right? Even though they've been around for 20 years, that means people have a risk on appetite. That means people are willing to bet. The options for Reddit are probably out the wazoo, given the thing's up 30% today. Options are probably up 100, 200%. And that's good for the broader market. So even if you don't own Reddit, it's kind of good that Reddit's going up because that means liquidity is in the system. Now, here's another thing I wanted to show you guys. I got to pull up Ryan Detrick, my boy, one of his tweets. I got to show you guys these tweets when I see them, because well, it's pretty exciting when I see these tweets. I'll talk about the Robinhood credit card announcement a little bit. I actually have an exciting announcement about that. I have an announcement about Robinhood's credit card announcement, so I'll talk about that after the market close. But this is what I want to show you. I got to show you these because we need to see these just to keep the bullishness. It's just like and also let us know that we're not delusional for being bullish here. So he says, would you believe that the historical bullish month of April does even better when stocks are up in November, December, January, February, and March? It is true. Incredibly, the rest of the year, the final 9 months of the year after March, have never been lower either. Higher 11 for 11 with an average return of 11.9%. So let me summarize that again. If the S&P is higher than the subsequent month in November, December, January, February, and March, the next 11 months of the year, 11 out of 11 times when that has happened, on average, are higher by 11.9%. You can see right here, the final 9 months of the year, we end at 11.9%. Last time this happened was 2013, guys. Last time we had the S&P higher from November, December to January to February to March was 2013, so about 11 years ago. And the final 9 months of the year were up almost 18%. Again, you see stuff like this historically, the precedents that are set in the market. And maybe it goes to show that these things tend to happen and the sort of things line up. Siraj, thank you for the $1 super chat. And that allows you to be a little bit more bullish because it has happened in the past. And if it has happened in the past, maybe it can happen again in the future. Bitcoin right now, 71,063. We got the market close in 30 seconds. No real important earnings today. I'll check again, but I don't think there's anything too crazy. Later in the week, we have some different earnings. But today, nothing too crazy to look at. We will have a bunch of topics to talk about after the market bell. And we'll be analyzing what's going on in the market. Thomas says that is some serious grasping. I would say I get how someone could say it's a stretch, but the problem is it's only happened 11 times. So if it's only happened 11 times, maybe it's not a stretch. Maybe whenever these circumstances of events happen in a year, like the previous 11 times, maybe it's because there's things going on that allow the potential for the S&P to continue to return higher. So yeah, it's a little bit of a stretch, but also maybe history justifies some of it when you put all the evidence together. All right, it is 4 p.m. Monday, March 25th. Market is now closed. All right, as the market's closing, look at Bitcoin. Look at Bitcoin go. 71,200. It's hitting higher, dude. Robinhood closed above 19. Robinhood closed above 19. I mean, I think we knew it was going to happen, but just seeing it happen is so nice. Wow. After hours, it's 19.14. It's up 0.31% after hours. Wow. Look at that, dude. Look at that. closed above 19 for the first time in 3 years as Bitcoin 71,177, baby. This is awesome. This is awesome. All right, we'll go back to Bitcoin in a second. CleanSpark ends up the day 19% higher. So CleanSpark having a very good day. Let me just pull up one thing real quick. Okay, cool. So CleanSpark there up 20%. Micron, by the way, all-time high on Micron. All-time high on Micron, 117. I think it hit the 52-week high today at 121. So very good for Micron Technologies. They had a great earnings last week, $793 million in profits. SMCI was up 7% on the day. Boeing, their CEO, stepped down 1.3% on the day. QQQ down about 0.36% on the day. And see, this is a good thing. You want to see the major indices where SPY. Is SPY down on the day? Yeah, SPY and QQQ are down, yet other stocks are up. That means that there is still liquidity and market participation. It's just not centralized within the major indices, which is okay because that means other companies are participating in the momentum. IWM, yeah, there you go. That's up 0.21% of the day. So that's actually okay that the indices are down. And the reason the indices are down, obviously, is because Apple was red today. Microsoft was red 1%. Meta was red. Google was red. And again, these guys are red after massive green months. Meta, massive 3-month run that they're having. So when I say they're red, they're like Meta at 500. It was at 395 2 months ago, right? So like it's red, but it's obviously had a hell of a run. And you want to see them relax a little bit and have some of their momentum change to other stocks. 179 on Amazon. Nvidia closed at 950. Tesla, also great day for Tesla, up 1% of the day, 172. Nvidia closing at 950 is incredible, dude. Nvidia closing at 950 is incredible. MicroStrategy closed at 1856. It's up 1875. It's up another percent after hours. And that's because Bitcoin's surging towards that $71,000 level. Ethereum, 3,600. Coinbase closes up 10%, 9.47% of the day, 279, which is just incredible. Let's look at some of these other stocks. Roku is up 1.67%. Square, another sort of Bitcoin proxy, up 2.27%. Netflix, 628. Netflix, I was reading through their earnings call, $17 billion they spent last year on content. These guys spend a lot of money for me not to find a single freaking thing on Netflix. It is absolutely incredible how much they spend and how much time I waste trying to find something. Google, 151. Robinhood, 1910 after hours, 1908 closed on the day, up 4.26%. Bitfarms, up after or down after hours, down 0.44%. Cypher was up 13%, up another 1.3% after hours. TSM down a little bit on the day. Qualcomm down a little bit on the day. Broadcom down. So semis were down today, except SMCI and NVIDIA. Yeah, all the semis looked like they were pretty much down. Where's AMD? AMD 178. Yeah, AMD took a little breather. SMCI was green and NVIDIA was green by 0.76%. Not too bad. Oh, PayPal closed above 66. Wow. PayPal 66. Up 1.9%, baby. Not too bad. Not too bad. Okay, cool. Little announcement I have to make around Robinhood's credit card announcement. So I was going to stream the Robinhood credit card thing yesterday. I probably can't do that anymore. You're going to have to tune into the official stream. And the reason for that is I got an email about 20 minutes ago that has invited me to the credit card launch. It's in New York City, out of all places. So yeah, your boy is going to be at the credit card launch. I had no idea this was happening. I got an email from some random lady who works at Robinhood, and she said, "Hey, you're invited. You're on the guest list. Show up." And I'm like, "Okay, I will do that." So I will be there. That'll be pretty fun. Make sure you're following on Twitter. I swear I did not know this was happening. Like I literally got this email at 3:20, and I didn't even check it until 3:36. I didn't even know because I do not disturb on, so I didn't even know I got the email. But yeah, I'll be there, and it'll be pretty cool, dude. Maybe Vlad's there. I have no idea. I don't even know if he's doing this from California, if he's doing it from New York. I have no idea what the heck's going to happen, but it's going to be super, super fun. So just putting the Twitter in the chat. I'll be live tweeting the whole event tomorrow. So I won't be able to stream it, but I will be live tweeting the whole thing, and it'll be pretty cool, dude. It'll be. I promise. I did not know this was going to happen. I would show you the email, but I don't want to show the person's name. But yeah, it'll be pretty cool. So I think so now my thoughts on the credit card. People were saying, what do you think about the credit card announcement? I think this card's going to be really fucking dope, dude. Robinhood understands product. They understand product really fucking well. This has been one of my bull cases about Robinhood. 1913 after hours. If they understand product, I think they're going to come out with a credit card that actually is exciting for consumers, is something consumers care about, and is something the 1.42 million gold subscribers they have would be willing to try out. And at the end of the day, with consumer subscription products, you just want to know, are people willing to try it? Are people willing to sign up for it, even if they don't pay for it, which you're not probably gonna have to pay for anything. But once you're locked in and you actually start using the credit card, you would get a lot of rewards. Robinhood would make money on the back end. They have 1.42 million gold subscribers. I think they're going to convince a decent amount of them to sign up for it. And then the people that aren't in gold, if you have to pay $5 a month to access 5% APY and all the benefits of the credit card, which if they have a good announcement tomorrow, it's going to be compelling. Maybe they get, I don't know how many gold subscribers, but let's assume they get a decent amount, maybe a couple 100,000 over the next few months. That is another $5 a month, 100% margin, 90% margin times XYZ 100,000 subscribers. Revenue. That's a revenue stream that does not matter if Bitcoin goes up or down, if the stock market goes up or down. That is a business they are building independent of trading. So it's going to be exciting. And I think the credit card is going to be super fun. And I think the announcement will go well. Now, granted, we have to see what the announcement looks like. But because I trust Robinhood's product mindset, I trust they're going to announce something that's super cool. Again, I did a deep dive on this a long time ago. I'm not going to go through the whole thing. I'll put it in the chat. But I did a deep dive on what I think the credit card would look like, which is their X1 thingy. They acquired a company called X1 for $100 million back in, when did they do this? Back in July. And by the way, they've made about $9 million from the credit card over the past 2 quarters. 4 million Q3, 5 million Q4. I think that 5 million can turn into 15, 20 million over the next few quarters, which is going to be, again, a lot of money coming in. That's independent of the gold subscribers they would get because of the credit card. That's going to get a lot of people excited. So in terms of the credit card, I think it could be exciting and I think it could be really cool. And if it goes well, then no, will the street react to it? I don't know. The credit card offering has to be so cool that the street's like, wait a second, why don't we have more Robinhood? Right? Like this is a great product. They're not going to announce any numbers or anything, right? Because the product isn't out yet. So we're going to have to wait till Q1, Q2 to get those numbers. So I don't know if the street's going to react just because they did a product. But if the product is that good and the street looks at it and they're like, holy crap, this is going to get a lot of users, the street might react to it. And then you might see a bump in the stock price. But we'll see if that actually happens. I wouldn't count on it because the street doesn't really react unless there's actual numbers to these product announcements. But if the offering's cool, then maybe the street cares deeply about it. So we'll see. You guys are saying someday Amit will forget about us. No, that's not happening. I am on this stream. You guys know how grateful I am to even be on YouTube and have people show up every day. It is the greatest honor of my life, quite frankly. This is what I've always wanted to do, dude. You guys know I'm not going to get into the whole story, but I've always wanted to perform my whole life. I wanted to be Michael Jackson. I couldn't become Michael Jackson. That's why I bought a jacket this morning that makes me look like Michael Jackson. If you were in the market open, you caught that. And so I've always wanted to be on stage my whole life. And this is every day, 2 times a day, market open, market close. I get to be on stage. Now we just want to see how big that stage can become. And you guys are giving me the opportunities for Robinhood to even invite me to certain events like this. So it'll be super cool, super fun. Jenny Son, thank you for the $9.99 super chat. Amit, my husband is your biggest fan and diehard Palantir lover. His birthday was yesterday, and it would make his day to get a shout out from you. Please wish my husband Philip Gray happy birthday. Philip Gray, Mr. Gray, happy freaking birthday. I hope you're having a great birthday. Thank you for tuning into the streams. Thank you for watching the Palantir videos. We got a good Palantir video coming out today that I think you're going to like about AIP now. And thank you for letting your wife tune into the streams as well and let her get a dose of what's going on in the markets. So shout out to Jenny. You have an awesome wife for doing this super chat. And I appreciate you so much, Philip, for being here. I appreciate everyone that are here and that are consuming the content. Philip Gray. That's an interesting name. Gray. I was trying to think, how can I make a joke with Philip Gray? Well, here we go. So Mr. Philip Gray, obviously, as you get older, your hair gets gray. But as you get older, what will probably not be gray, in fact, what will be another color, a color that's so much better than gray, is green. And I think your Palantir shares will become green as your hair becomes gray, which is going to help all of us as we get older deal with the graying of our hair, because our Palantir shares are going to be motherfucking green. You know what I'm talking about? Philip Gray, happy birthday. And thank you, Jenny, for being here as well. Okay, let's get an update on what's going on with Apple. or actually with this big tech thing that's going on. So we know big tech is going to be investigated by the EU. Here's an update on that. We talked about it this morning, but here's a little bit more on why the EU is investigating these guys and what this might have in terms of implications for these companies.
What that might mean for big tech and Google in particular in today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So past crackdowns on big tech in Europe, that's mostly amounted to speeding tickets or minor slaps on the wrist. We know this. But the Digital Markets Act, the DMA, it's different. That is why we may be seeing more stock reaction this time. You can see Alphabet and Google and Meta, Alphabet, which is Google, Apple, Meta, all down today. Now, the DMA is essentially European regulators going on the offense, identifying the so-called gatekeepers, laying out rules to try and prevent their future abuse of market power. The penalties also have more muster, and it puts breakups on the table, which would be incredibly difficult. But we wanted to take a look at where it might be less hard for some mega caps than others. Apple, for example, more closed ecosystem or walled garden than, say, Google, but also far more highly integrated. So how would it actually divest its app store? It's more complicated. It's also been less aggressive on the M&A front. Google, on the other hand, arguably less integrated. A breakup order could target separate businesses like cloud or past acquisitions. Its purchase of DoubleClick back in 2007, that complemented its core strengths in search ads, helped cement its dominance in online advertising versus like a Beats at Apple, which sort of made a difference around the edges. For now, at least, though, the street in Silicon Valley seem less interested in how the European regulators could impact Google's current business. They're more interested in a recent development that I wanted to talk about. Last week, Google began testing its generative AI within the main Google search interface. I'm told that it was very limited test and a small number of queries, but it's ongoing. Morgan Stanley writes it could suggest a broader rollout sooner than expected, despite that innovator's dilemma concern. That's what we've
My question is, how are they going to make money off that? I still don't fully understand it yet.
talked about a lot over the last month, the idea that it would have to sort of disrupt search in order to get ahead in Gen AI. The key part of that rollout, it continues to serve ads on the result pages, even within that Gen AI proposition. So that does ease some of the concerns that Google isn't monetizing it or moving aggressively enough. This is, guys, Gen AI in the wild, which a lot of the street has been asking for with ads. So can Google have its cake and eat it too?
That's really weird, though. Why would anyone click on the ads if they just get the answers? So I don't know if that's like, if I get the answers on Google, why would I click on the ads if I'm getting the answers? Robin at 1915 after hours. This bad boy still running after hours today, up 0.37%. But yeah, if you give me the generative search, if you give me the generative ads, like, what's the point of even generating it if I scroll down? Because if I don't scroll down, then I don't need the 10 blue links. But if I need to scroll down, then your generative AI was bad as an answer, right? Like it was, or I guess a combination of both could work, but it feels like you want one or the other. I'm using ChatGPT a lot nowadays, dude. I use ChatGPT like 3 times today already. So to me, a generative AI answer seems to be the way to go. And, you know, maybe Google wins if I pay them instead of ChatGPT, but it seems like a consumer subscription model is going to be the way for a majority of the power users of AI services, right? It's so interesting. It's such a conundrum. Like, if you're Spotify, you actually want people to listen to less music, because the more music they listen to, the more your server costs go up. And it's not like you make any more incremental money from the $10 they pay per month, right? Because it's a fixed cost. And so if they use the product more, you have to pay more like to service the listening to the music. Same thing with Google. It's like, you don't want consumers to get that good. You don't want technology to get that good. And so you have these perverse incentives where you actually don't want people to use it as much. Netflix, I mean, I guess they want you to keep watching, but every time you watch, they're paying AWS a lot of money to service that. Now, you want them to be sticky, but you don't want them to be so sticky that they end up watching 15 hours in a day. And then, they run up the server cost. So it's a really interesting mix these tech companies have with these business models. And Google right now in that same dilemma in terms of what to do about search and generative AI answers. Thomas says, I think undoing past acquisitions is ridiculous. Just do your job right the first time. Yeah, that's why anyone saying like Congress would get Zuckerberg to get rid of Instagram. It's like, no, the Obama White House said that he was allowed to buy Instagram in 2012. If they had a problem with him then, they should have had a problem. They didn't have a problem. So undoing it right now, I think, would be ridiculous. So I agree with that. That's probably insane. I saw Elizabeth Warren today arguing for her wealth tax. I can pull up that video in a second, but she, some of these politicians have these arguments. It's just a question of how far they can get into Congress. We got Reddit at $60.75 after hours, up 1.76%. Bitcoin falling just below that $71,000 level, 70,904, trying to fight for it. Robinhood, 1914 after hours, continuing to do what it's doing. SMCI, 1,048, up another 0.5% after hours. Tesla, good day for Tesla. They started advertising. Prices went up for the Model Y last week. Maybe sentiment is shifting a little bit, dare I say. Obviously, we know Q1 numbers are still not going to be good. So we'll see what happens. But right now, Tesla in that 170 range, not falling back to the 160s. What's also interesting about this is Amazon. So Meet Kevin sold out of Tesla. Meet Kevin bought Amazon over the weekend. This that I got the update from his PP email thingy that he bought Amazon, which is interesting. I mean, I think he put 5% of the fund or something into Amazon, something like that. But he bought Amazon, or he increased Amazon by 5%. He didn't have Amazon before, but this is the notification. So Amazon's a no-brainer in my opinion, but he is buying it at close to all-time highs, and he just sold Tesla, which is not close to all-time. Well, it's actually closer to all-time lows than Tesla is to all-time highs. So an interesting decision to get rid of Tesla and Enphase and to go into Amazon. He obviously has a lot more volatility coming in the broader markets, but I guess the interest rate plays don't feel as exciting to him anymore, given what we've seen with some of the issues with interest rates right now. And when interest rates come down, hopefully Tesla will do a lot better. Lang W says, where Tesla advertised Money Myth? They advertised on Facebook. They advertised on Facebook today. They advertised on Facebook. So I showed it in the morning, but they are officially advertising on Facebook. I did a post about why I don't think it's super hypocritical. Even it's probably hypocritical, but it's not that big of a deal given everything Elon has said about Zucks. But there you go. That's what an ad looks like. And he is now advertising, or Tesla's now advertising on Facebook.com, the big blue app. Yo, be honest in the chat. Who scrolls through Facebook every day? Because my dad scrolls through it for like 2 hours. Be honest. Who actually scrolls through Facebook every day? Not Instagram, but Facebook. Who scrolls through Facebook? Hussein says, is PP totally out of Tesla? Yes, it is completely out of Tesla and Enphase. They're gone. And I made the mistake thinking he only slightly sold out of his Tesla. He got rid of all 36,000 shares. He is done with Tesla. So it goes to show you he's not bullish on Tesla right now, and he's actually a bit afraid of what's happening with Tesla. Now, let's get an update on Apple, dude. I thought about today picking up a couple of shares of Apple. I'm not going to lie. I really did think about it because I think the price action now has been oscillating between this 167, 172 range for a while. I feel like it's hit a certain range. I don't know what sends the stock lower, to be honest. It's down already 10% year to date. Apple is not a stock that tends to be down 10, 15% or 20%. You got Buffett supporting you. It's the most loved stock in the world. Everyone buys Apple. I didn't end up pulling the trigger, but I am thinking a little bit more. 165 is when I get really excited. 170 is still a little too much for me to get into it. But let's get an update on what will happen with the App Store by June and what Apple may be doing for the future.
This morning is the analyst behind that note, Melius Research's Ben Wrights. Ben, we talked about your note today with Kramer in the 9 a.m. Pretty fascinating. I mean, you're essentially suggesting anybody who thinks they're behind is not an adept long-term student of Apple culture.
That's right, Carl. I think that you have to go back in time and realize this company has a history of convincing a lot of leaders to make apps or do something with them while they perfect the ecosystem for which it's consumed. Go back to iTunes. Steve ran around talking to a bunch of the music companies saying, hey, look, we got this vision for $1 a song. And lo and behold, iTunes saved the music industry. His coercion, his convincing skills really helped change the world then. Then he did it again with the iPhone, where they didn't necessarily make all the apps for the iPhone. They made some, but they made everybody else's apps better and made it so you can enjoy them. I think they're doing the same thing in AI. Yes, they're talking to Google, but they're talking about having Google be one of the many models you have access to so that this new kind of app store.
I don't know if that's what it would look like. I don't know if they're going to have like a K version of LLMs inside of the App Store. Maybe but it seems like they want to legitimately partner with Gemini for that to be the base layer that people get access to. So maybe they're partnering with other LLMs, but I thought it was mainly just with Gemini.
Store can take advantage of AI, and I think they're probably doing it again. And Tim knows how to do this.
So when do you think we begin to get clarity on the end game, and how do you think prices of the stock adjust? Over what time period do you think?
Well, I think that in June, we should start to see them lay the groundwork for this new app store, for how it's going to work with AI, how you can buy AI apps through the app store. I'm sure Apple will have their own apps as usual, an AI assistant. Hopefully they upgrade Siri, which is probably in need of that. And then we'll start to see how this could flow through to the services line. If there starts to be a narrative that services can accelerate growth, that'll be really helpful. And then we think there's a huge upgrade cycle coming for iPhones, probably in 2025, where the silicon and the software is really optimized for processing AI at the edge on your iPhone so that you have a no latency, excellent experience. In terms of the stock price, look, most people know it's a really tough quarter because of China. But then the stock may be able to find its legs afterwards when...
I agree. I think the stock will be able to find its leg afterwards. What he goes on to say is that once that app store becomes finalized, investors have a little bit more stability in understanding what Apple will look like. They did launch Vision Pro in China today. Again, I think Vision Pro is a dud. If I were to buy Apple right now, it's not for Vision Pro. It's not for the AI app store. It's for the fact that it's Apple. And I don't think investors are going to let this bad boy fall to the 150s, 140s, right? Maybe 160 is max pain, but I don't think they let it just collapse, because at the end of the day, you know, this is a company that's doing $100 billion in revenue a year. Even if they're not growing that much, I think investors will find some justification to prop up Apple. It's also down 10%. So, I mean, hopefully generative AI is something that's exciting for Apple. It's not a Mac 7 that I'm interested in at all. Quite frankly, it's not something I want to make a big position, but it is one of those things where it's like, do we really think Apple is going to go into a tough position right now? So Apple was $41 back in 2019, peaked at $199 in December, and since then has just been in a downtrend here at that 170 range. I don't know, dude. 168, it went down. I just kind of feel investors are ready to buy up the dip as it falls into that 160 level. The biggest question for me when it comes to Apple is, what do they have to do for this thing to really collapse to the 150s, right? So that would be another, call it 10% down. So for it to be down 22% year to date, like we know why Tesla's down 22% year to date. I mean, Tesla, their margins, the deliveries, the fact that they already told us the rate of growth of deliveries is going to be bad. Margins probably at bottom, but they didn't tell the street that it bottomed, so the street doesn't know if it bottomed or not. And then you've got basically no real updates on if FSD is actually going to become commercial, even though everyone's tweeting about at 12.3 is the best. So you could understand that being down 30% year to date. And the CFO left, right? There's a lot of internal drama. Apple has no drama other than the fact that they can't grow. And Vision Pro isn't really the growth curve. Services might be the growth curve, but it's not the growth curve. And then AI, they're perceived as being behind around it. If they come out and they say, hey, we're good with AI, we're ready to go, we have 2 billion users, they're going to open their iPhones tomorrow and they're going to have a personal assistant that's going to be able to help them. I mean, you could imagine they're going to monetize that in some capacity. So I think Apple should be okay. And I'm looking at it, but looking for 165 to get really excited for it. Here's an ETF I found over the weekend. That you guys might not know of, XLY. XLY. So let me show you guys the holdings in XLY. XLY is a very interesting ETF. So XLY is a consumer discretionary ETF. And I saw their holdings that it's up. It's not up as much as some of the other ETFs year to date. Year to date, it's up about 2%. So not amazing, but it is one of those ETFs that I thought was rather interesting. So it has Amazon, Tesla, Home Depot, McDonald's, Lowe's, Bookings, Nike, TJX, Starbucks, and Chipotle. So the reason why this is a consumer discretionary fund is because basically they're looking at what are consumers shopping at, what stores are they excited about, and can we amalgamate them in one place? Now, why is this ETF only up 2% year to date? Nike, not doing the best. Tesla, obviously, not doing the best. And then I think Starbucks. Where's Starbucks year to date? Starbucks year to date. Yeah, Starbucks doing bad as well, down 5%. So you got 3 of the big brands that aren't doing that well, but the other ones, they're doing pretty well. Lowe's, Home Depot, McDonald's, they're doing pretty damn good. Chipotle, did they No, they didn't split yet. Okay, so I think the Chipotle split is going to be probably next week or the week after that, probably by the end of this month. But they're up 27% year to date. So that is an ETF to look at if you're interested in betting on where consumers are shopping at without having to pick individual names. If you think Tesla, Starbucks, Nike will be in a recovery mode, this is one of those ETFs to look at that might end up offering some returns. Over the past year, it's up 27%, 5 years, 63%. Year to date, it is up 2% because some of those bigger names did not do as well. I've owned XLY since 2020. Okay, interesting. I found out about it over this weekend. I'm trying to learn a lot more about ETFs that exist because, we know the Qs and the S&P Ys of the world, but like SMH, I wish we knew that a couple years ago, right? Like we should definitely look at other ETFs instead of having to only look at individual equities, because if we want exposure to the consumer without literally having to pick, is the consumer going to Lowe's or Home Depot? Well, what if you buy an ETF that just has both of them, but that's targeted at the consumer, right? Versus the S&P that has both of them, but that's not, concentrated in that direction. So I'm going to be trying to find a lot more ETFs that we can pull up and take a look at as well. PayPal down a little bit after hours, 65.91. Robinhood 19.16 after hours. Again, we'll see how that announcement goes tomorrow and if the street can get excited for that. Reddit up 3% after hours, dude. Holy crap. Goodness gracious, bro. Do you see that green candle after hours? Like, this is insane. Look at that. 61.74 after hours on Reddit. The options themselves have to be up almost 100, 200% today. The thing's up 30%. It was up 40% last week. Goodness gracious, Reddit. Well, there you go. Tariq says SMH 10x in 10 years. See, these are the ETFs we need to know about. My guy, Jose, who I do the semis pod with, he said when he has free money, he doesn't put it into SPY. He puts it into SMH. And he's already pretty concentrated into the semis. So maybe there are some better ETFs out there outside of just SMH, out of just SPY, or at least different portfolio or different like buckets of ETFs that are more concentrated in a way. That's interesting. Here's another chart I wanted to show you guys. It's another one by Ryan Detrick, who does some great research. So take a look at this chart, which I thought was really interesting. Amid is looking to ETFs means market is euphoric. Isn't that the opposite? Isn't looking to an ETF means the market isn't like, if I was looking at an individual equity, isn't that more euphoric than just an ETF? Amid the website FinViz has an ETF heat map of all the biggest ETFs. Can you send the link? I've used FinViz before. I don't use it too much. Well, let me type in FinViz ETF heat map. Let's see if it just pops up. Oh, I think I got it. Is this it? Oh, wow. Thank you, June. This is a incredible revelation. This is super cool. Wow, look at that. Oh, this is really cool. Dude, this is awesome. I did not know this was a thing. So I'm going to put the link in the chat if anyone wants to check it out. This will be so good throughout the streams for us to look at. So you got the big US, like sort of entire market ETFs right there. Then you got the technology sector. Then you have consumer cyclicals. Then you have crypto. Look, we got all the cryptos. They're up 11%. Oh, this is great. This will be super easy to show you guys in the morning. Fixed in. Okay, so can I click on an individual one? So if I click on QQQ, okay, I can probably go deeper into the website and click. So I can't click on it from here, but I'm sure there. Oh, I can search right here on QQQ. Okay. Okay, so I can't click on it and see the holdings right from there, but I'm sure you can do it later in the other parts of the website. This is really cool. Okay, so in general today, ETFs were relatively down outside of crypto that was green. And we got the inverse ones that were green, short QQQ, all those because the QQQ and the NASDAQ were down just a little bit. Energy was up a little bit as well. This is awesome. EWJ Japan ETF. Wow. See, I think I'm starting to like ETFs a little bit more because it allows you to learn so much about what's happening in the broader markets. Yeah, look at that. EWJ. This is the one that Mr. Seymour Duck was just talking about. This one's up 11.6%. S&P is up about 10%. Japan, obviously the Nikkei index hit an all-time high this year as well after a while of stagnation. We found that ETF the other day that was showing you companies that are almost in the S&P 500. They have the requirements, but they're not there yet. Palantir, Datadog, a bunch of those companies are there. And when you look at ETFs, the sort of like philosophical thought process I go through is, what is a company in here that I haven't seen before? And then can I go down a rabbit hole of that company to understand it in a better way? because I was introduced to it because of the ETF. And then I get a lot of information, and maybe there's an investment opportunity there, right? So I think that's the cool thing for the ETFs. Amid, double click on the box and it'll take you to the ETF. Oh shit, you're right. Dude, why did I not know about this before, dude? This is awesome. This is so cool. So if I want to double click on IWM, yeah, look at that. I get a whole chart of it. And I get to see the top 10. Oh, this is great, dude. This is so good. How did I not know about this before? Shout out to June, who introduced us to this. Look at this. We get to see the top 10 companies. I knew SMCI. See, look at this. I did not know MicroStrategy was in IWM. Did anyone know that? Oh, you guys can't see it. I'm not sharing it. Did you guys know that? Did you guys know MicroStrategy was in IWM? MicroStrategy is being debated to get put into the S&P 500. I did not know MicroStrategy was in IWM. Why isn't IWM even up more then? You would think SMCI and MicroStrategy, which companies that have done phenomenal this year, you would think IWM is up a little bit more. Wow. Like, did anyone know that was the case? I don't think anyone knew that was that's amazing. Okay, so this is awesome. This is a really, really cool website we'll be able to use. The tabs on the left side, you can switch to a stock heat map. Okay, that is perfect, dude. That is actually really good. Let me exit out some of these tabs real quick. That is actually incredible. I'm going to use this literally every day. Yeah, look at this. This is the S&P ETF or tabs on it. So overall, as you can see, big tech didn't do the best today, but these are all 500 companies. I always wanted to find like all 500 companies in the S&P, and I know there's a bunch of lists out there, but this is an easy way to just look at everything. Okay, cool. This is very good. Every day, this is going to be very easy to look at this. So MicroStrategy and SMCI are big parts of IWM. MicroStrategy might be getting into S&P 500 in the next rebalancing, which is in June. Palantir might be up for that as well. We'll see. If Palantir and MicroStrategy get in, that would be incredible. Here's a chart I wanted to show you guys. So Ryan says this could go down as one of the best quarters ever. Went up 10%. 2024 isn't there yet, but it's close for the S&P 500. The final 9 months gained 10 out of 11 times. 1987 was the one red year that didn't happen. Obviously, there was a market crash in 1987. Interesting that the election years in 76 and 2012 saw modest gains the rest of the year back then. So if the S&P 500 is up 10% or more in Q1, and we still have 6 days left in Q1, so we might not be up 10%, but we'll see how it ends out. 10 out of 11 times, the returns the final 9 months of the year end up being green, and on average, they're up 6.5%. In 1987, it was down 15%. 1976, it was up 4.6%. In 2012, it was only up 1.3%. So maybe because it's an election year, just like those election years were, 2024 might not end up being very high towards the latter half of the 9 months, but it'll still be green, which still would be very good for the S&P 500 to end at that level. So not bad. Not bad at all. By the way, for those looking for the link, I'm going to put it in the chat so you can save it right now. This is the S&P one. And then you can just filter on literally the left-hand side of the screen to the ETFs. So you can click on that link. It's right there in the chat. This is really good, June. Thank you for this. This is really good. I always knew of FinWiz, but I never used it actively, but I always knew of the website. But this, I'm going to use this thing every day, dude. This is really good to get a bird's eye, high-level overview. And then I can also find companies in here as well that I didn't even know about that are part of these ETFs and the broader market and the S&P. Not bad. Not bad at all. Let's take a look at some of these equities. So Robinhood, 1912 after hours. It hit 1917 after hours. Right now, 1912. Reddit, it's up 4%, dude. 62.20. Pretty damn incredible. Pretty damn incredible on the S&P. Not the S&P, the Reddit. That's incredible, dude. So Reddit's up 4%. Now 4.35%. People are buying it after hours. People are absolutely getting into this one. SMCI up about a 1% after hours. Where's, okay, so NVIDIA's 950. Where's the crypto companies? Where's MicroStrategy? Wow. MSTR up another 1.78% after hours, 1885. It's trying to go to 2,000. Bitcoin 70,749. Coinbase 279. Marathon's down and Bitfarms is down. Jesse, friend of the channel, he sold his like 50,000 shares of Bitfarms today. So he saw that CEO news and he got out of it. Definitely weren't the best optics. I agree. The CEO stepping down, it's kind of weird. Robinhood now 1915 after hours. But I mean, who knows? Maybe it's not that big of a deal, you know? Coinbase 282. It is kind of weird why he's leaving before the halving event, though. You would think that's like going to be good for the company, but I don't know. Maybe he just wants to stay. Maybe he was like the Boeing guy. Maybe he's just getting older and he wants to step down, as he told us today. So there we go. But we got Coinbase at 279 as well this morning. Okay. Another thing I wanted to show you guys here. So couple of things. Let me pull it up. Okay, so here's one of the things we talked about this morning that I thought was really interesting in the context of China and what we see that's happening in China, which is that they banned Intel and AMD chips. Now, I don't think that's going to matter that much. And quite frankly, I think the US government is happy that China is banning Intel and AMD chips. So the US government doesn't have to like put on another regulation. Here's one of these analysts saying that the overall impact from Bernstein might not be that important either. And Intel and AMD, should be fine. Intel got $20 billion in subsidies on Friday because of more subsidies from the Biden administration for manufacturing of chips in the United States.
As you digest what Christina just said, talk to me about why you haven't changed either your models or your forecast, your price target forecast on these stocks. Do you agree with what apparently some of the executives has told Christina, that it's really, my word, not theirs, immaterial?
Well, that's not what Christina said. She was talking more about the export controls, right? This may be different or incremental. We don't know yet. You can look at the exposures, and you sort of talked about the Intel 27%, AMD 15%. That's not exactly the right number, though. Those are sales into China. It doesn't necessarily reflect actual consumption in China. Just like a lot of PCs, for example, are put together in China. That'll show up as Chinese revenue. If you look at the end market shipments, PCs and servers, China's responsible for maybe 15% of total PC consumption. Non-consumer is 2/3 of that, so it'd be about 10% of the world's PCs go into like non-consumer stuff into China. Government's a portion of that. It's probably low single digits, would potentially be impacted over time if this actually comes to play. Servers, about 30% of servers ship into China, and again, like government usage of servers in China, it's probably fairly small. You can roll that through the numbers for both Intel and AMD, and we did that. It's probably low single-digit percentage of revenue, probably worst case, I think, for both of them. It's Intel's earnings worse because they're less profitable, and so if you take a similar chunk off of both of them, it actually hits Intel worse. But there's nothing to change yet, if that's what you're asking. Like we saw this announced. Apparently, these rules were actually put in place in December. They may be actually starting on the procurement process to engage those rules now. It's probably not anything like as a cliff. Like it probably takes, like it'll happen over time, assuming it happens at all.
So that's another thing. The rules aren't going to happen anytime soon. The actual implications of AMD and Intel not being able to sell, it's going to take at least a quarter, I would imagine, for that to happen. So their revenue projection shouldn't be messed up that much for Q1. Like if they shipped it in February, they're not going to ship it back, right? And then China actually has to go through with it, right? They proposed this ban. The ban has to actually happen. So from that perspective, if you have AMD or Intel or you're in any of those semi names and you're afraid about the China revenue going away, I don't think it's that big of a deal. And I also think even if it happens, these companies have enough demand. They're going to be able to bring up that source of revenue from other places, even if they can't get it from China. And we saw this with NVIDIA, right? NVIDIA crushed earnings even without having Chinese revenue come in. Robinhood 1916 after hours up 0.34%. Bitcoin trying to make a run of that $71,000 level, and then Coinbase up 283 after hours as well. James says, Amit, how come you didn't buy Coinbase in Rex Hood? Well, yeah, 100%. Coinbase is up 7x. Robinhood is up, maybe 1x from the lows. The thing about Coinbase is I didn't understand the business, nor did I really understand crypto back when it was at 30, 40 bucks. Robinhood, I use the company every day. I understand the business. I've really gotten a stranglehold on like what this company is. I can actually hold it if it goes down because I know what I'm looking for in order for it to go higher. And back in February 2023, they were still getting sued by the SEC. Coinbase is still in a lawsuit with the SEC. I don't think that's a bear case for the company, but I didn't fully understand that if Bitcoin goes up, Coinbase just goes up. Now, I know you might be saying, well, how did you not get that? Well, if everyone got that, they would have made 7x on Coinbase, right? But at the time, I didn't really understand why would Coinbase just naturally go up if Bitcoin goes up. Now, as Bitcoin started to go higher, Coinbase started stagnating as well. It didn't really break out until like November, December. And then when it broke out, right? So to me, wasn't that interested in Coinbase, and wasn't also that interested in the crypto narrative. But by November-ish, I started getting much more interested in how crypto is going to affect stocks. And I think 2024, I've said this, small caps with a catalyst are going to be big winners this year. Coinbase and Robinhood, not really small caps, but still, Robinhood at like less than 20 billion, Coinbase at 40, 50 billion. Where's Coinbase in market cap? Is it even at 40 billion? Coinbase is at, Coinbase now 67 billion. So before, Coinbase was at like 30 billion, right? Like before this run. They had a catalyst. They were a quote unquote small cap and they had a catalyst. And that's what you had with Coinbase. James says they're a monopoly. Yeah, see, I didn't really understand that. I really didn't get it. And Coinbase has been the obvious bet, dude. I mean, Coinbase was the bet to make if you were bullish for Bitcoin, that or MicroStrategy. Both of them big monopolies in their space. MicroStrategy is a monopoly on a company that owns Bitcoin on their balance sheet. Like what other company owns Bitcoin to the level that MicroStrategy has? In fact, I tweeted it this morning. Let me show you guys this. I was going to show it earlier in the show, but MicroStrategy's valuation is not even that crazy. MicroStrategy valuation is not that crazy. SoFi, they have news? Did they put out a press release? Oh, let me share my screen. Let me check SoFi real quick. Do they put out news? SoFi IR. Is there any news on SoFi? News. No news on SoFi. No news on SoFi. Nothing on SoFi. Okay, so let's look at this. Using rough numbers, MicroStrategy purchased all their Bitcoin for about $7 billion. They're at like 31,000 a coin. So they're sitting on a double. So let's round up to 15 billion. They have 15 billion in Bitcoin. 7 billion they paid, 8 billion in paper profits. The market cap is 30 billion. So the market's giving MicroStrategy a double on their Bitcoin holdings. The actual company software is worth maybe $1 billion. If you look at the market cap before they bought Bitcoin, there was like 1 billion, 2 billion. It's probably realistically not even worth that much. So a 2x on their Bitcoin holdings is not that crazy to me. Because if Bitcoin does get to 100K, MicroStrategy will be sitting on $21 billion of paper profits. Right? So if you say, hey, someone today said, oh, why is MicroStrategy up so much? They already have such a large market cap. And I said, did you look at the market cap? It's only 30 billion. And they were like, oh, actually, no, I didn't look at the market cap. I thought it was way higher than that. MicroStrategy, technically, I know a small cap is like under $1 billion, but like for all intended purposes, it's a small cap. It's not a large cap at all. It's not big tech. It's not even 100 billion. So the market's giving a double to MicroStrategy based on their Bitcoin premium. The question now is that worth more than a double as Bitcoin continues to rise, because MicroStrategy will still be sitting on profits? The options market has exploded. So if anyone had MicroStrategy options, congrats. It took a lot of courage to bet on this when it was $300 in 2023, or when it dipped to 400 in mid-January. Obviously, Saylor, a very smart man. Market cap, you can see right here, 30.3 billion on MicroStrategy. So there you go. There you go on MicroStrategy. KQ Forever says, why own MicroStrategy when you can get Bitcoin directly through a Bitcoin ETF? I think it's about your risk appetite. Same thing with Robinhood and Coinbase. Like if you really were risk on when Coinbase was at $30 and you understood crypto, which I didn't at all, which is why I didn't get into it. Then you would have bet on those companies. You would bet on MicroStrategy. If you want exposure to Bitcoin without having the alpha that some of the options provide, or that some of the stocks themselves provide, like Bitcoin could go up 5% and MicroStrategy could go up 15% just because of the investor enthusiasm to be in that asset, and because the options and the leverage obviously fuels the stock price to an extent. That's why you would get into MSTR or a Robinhood or a Coinbase. But if you just want exposure, then you just get the ETF. If you want to be a little bit more risky, MicroStrategy will go up if Bitcoin goes up, and it might go up orders of magnitude beyond what a traditional Bitcoin ETF can go up. But you have to understand your risk appetite there as well. Noto's on Mad Money, whole new business launch competing against Intuit. What? Really? Are you sure? SoFi is launching a new business. Well, hold on. He did tweet something today. Noto tweeted something today that was interesting. But that was about Galileo. Yeah, it's like the SoFi. Yeah, that's interesting. I mean, I'll take a look at that. I don't know if they're announcing anything. I'll do some DD on that. I don't know if he was on Mad Money again. He was already on Mad Money last week. So that'd be interesting if he's on there again. Oh, Felix and Friends uploaded about an hour ago. Really? He's really? Hold on. I mean, that would be really interesting if SoFi is doing something unique. Huh. I guess you're right. It does seem like they're okay. I'll do some DD on this and we'll go over it later. It looks like you're right. If that's the case, look, SoFi. I mean, shit. If they have a new business, that wouldn't be bad. I'll go through it later and I'll see if that's true. Okay, let's look at some of the other equities we got. Speaking of SoFi, let's look at SoFi. But again, to wrap up that Bitcoin conversation, if you're more bullish on and risky on Bitcoin, then some of the other proxy plays are the case. If you just want exposure, I think the ETFs are fine, but it's really about your risk appetite. SoFi 745 right now. So SoFi was up 2% of the day. I think SoFi broke out to 754 at one point. So not too bad. Obviously, I mean, it's you got some momentum in SoFi, which is better than being at that 680 level. My options were finally profitable today. At one point, I was up like $600 on the spreads I bought. So those were in the money. SoFi has to get to like 850, 860 for me to start seeing real gains on those. So we'll see what happens. I think it's undervalued right now. And we'll just need to see where it continues to go from there. KQ says people don't get that MicroStrategy is overvalued. Bitcoin isn't. Well, again, that's my question would be, why do you think MicroStrategy is overvalued? They have 15 billion of Bitcoin. The market's giving them a $30 billion market cap. Is a double on their Bitcoin holdings overvalued? Right? That's the question. I don't think it is, dude. I don't think it is. I don't think a double on their Bitcoin holdings is overvalued. Bitcoin, by the way, back up to 71,000. I don't think the market says, okay, MicroStrategy, you have 15 billion in Bitcoin. We're going to give you a $30 billion market cap. That to me doesn't sound crazy. It really doesn't. Convertible debt and shareholder dilution doesn't matter because that dilution only happens when the stock goes up, right? That's the genius of, I think, what they're doing. Like you're not going to get diluted tomorrow. You're going to get diluted in like 3 years after it, theoretically, the stock is up orders of magnitude beyond the strike price by which you should get diluted at, which means the dilution shouldn't matter if you're buying in today. You know, that's the same thing with SoFi. They raise that convertible debt. If they do dilution in the next 5-10 years at $8, if the stock's still at $8, yeah, you're screwed. But the stock should be a little higher than $8, right, for the dilution not to matter. So, yeah, I don't think it's that overvalued. But again, it's about risk appetite and leverage when it comes to getting a position. Okay, last question. That's Rilkin guy says, what are your thoughts on Hood entry price? Look, to me, my price target for the end of the year is 25 on Robinhood. So it's a question now if you think getting in at 19, 15 and seeing it to 25 is a good return. Could it go past 25? Yes. If Bitcoin gets to 100K, I think Robinhood can go past 25. But at this point, that's my price target. I still think that's a great return. And in my opinion, I still think it is undervalued. Am I going to say, it's going to 30, $40? No, I'm not going to say that, because could that happen? Yeah, they would have to really execute and Bitcoin would have to do really well. If not, I still think 25 is reasonable. So to me, it is a proxy play on Bitcoin that has room to run, but it's not the same stock it was at $9. However, the big thing I keep saying about Robinhood is that their market cap's 16 billion. They have 5 billion in cash. So technically the market cap's 11 billion because where the enterprise value is 11 billion. So, I mean, if this thing runs, it can really run, and maybe it, passes a lot of expectations because it is theoretically cheap and they've got their crypto catalyst and they've got a lot of other product announcements. So that is what can continue to pull it higher. But do I think it's cheap now? Yes, I do think it's cheap. And I guess we'll just see how this announcement goes for the credit card and how everything plays out over the next couple of weeks. QQQ 445, SMCI 1048, Clean Spark 2340 up 19% on the day. Nvidia 950, Robinhood 1915, and then Palantir after hours 2455. I did buy 2 shares of Palantir today, so just 2 shares at like 2440. And I'm the video about AIP now that'll be out in like a couple hours. So I did a whole video on AIP now for those that are confused about it, those that want to know what it is about. We're going to get more clarity this week, but I think it's very bullish for Palantir. And when the street fully understands it, I think it's going to explode customer count. So that video will be out a little bit later today, and hopefully some positive news for Palantir. Okay. Sam says you are really underestimating the volume profiles, though. There is literally no resistance here until 30. So I've said that on the stream many times. I've said the volume shelf resistance on Robinhood above like the 1970 range is non-existent, right? It's like there's a lot of room to run. So I agree, dude. It could get there. It's just a question of that happening. My price target is 25. I think it can get to 25. If it gets beyond that, amazing. I think it's very possible it can get beyond that, but 25 is kind of where my price target ends up being. Okay, cool. That's it for me. Thank you everybody for being here. Pouncer Daily episode will be out in a few hours, and we'll be live tomorrow morning for the market open. Ray says, can you do the Robinhood stream, but you are just in the chat? I don't know if I'll be able to stream it from the event because it'll be crappy on my phone. You know what I mean? Like it won't be an actual stream. Robinhood will be doing the stream, so you could definitely tune into them. It's gonna be crappy for my phone. What I can do is I could be on the live chat if they have a live chat on their stream. So on their stream, I'll be in the live chat, and you guys will see me there. If I'm pretty sure they're doing it on YouTube. But if I do it on my phone, it's just like not gonna. The internet's just not gonna be that good. Okay, cool. That's it for me. Thank you, everybody. Hope you guys enjoyed. I will see you tomorrow, 8:45 a.m. And we'll be back tomorrow with another market open. And actually, we won't be able to do the market close. Yeah, because we're not going to be here tomorrow for the market close. Okay, so we'll be here for the market open tomorrow. Thank you, everybody. I'll see you guys later. Bye. Have a good one.